Time for the takeaway and striking while the patriotism is hot. Canadians are well aware that our economy is under threat. Our largest business partner is changing the terms of our contract, and like any single-source supplier, we are left with limited options. Exploring new markets and forming new trade relationships is our best course, but that takes time and money. The good news? Canadians are also willing to take the hit. A recent poll done by Abacus Research for The Logic showed that 71% of us will accept slower growth if it means ending America's dominance over our economy. It's a sign that self-reliance is seen as a worthy goal, even if it means it costs us in the short run. Of course, this only works for Canadians if the investments we make and the sacrifices that go with it get us somewhere better. The Prime Minister has a stated goal of diversifying Canadian trade away from the U.S. with a lofty target. 50% of our trade should be non-American by 2030. To do that, we will need more than just new trade deals. We need a new way of thinking by Canadian business and more support by the agencies already set up to help us. Of course, the low-hanging fruit of trade diversification is more energy. Oil and gas to Tidewater will send our overall export numbers higher, might even make our economy look more prosperous, but it won't make individual Canadians more well off. For that, we need to rely on our own ability to create, innovate, and manufacture, and then sell those things to each other and to other nations. The urgency around doing that is real because however we resolve our trade dispute with the U.S., the blinders are now off. We see our vulnerability to the one big customer, not as an advantage, but as a threat. Turns out that free trade wasn't the catalyst to make us more competitive, but maybe trade barriers are. My takeaway? There's a big job ahead for this country. The good news is, it seems that most Canadians are showing up to work.
Taking Stock, Fridays on BNN Bloomberg.